Hi, everyone. Oops, clearly doing something wrong here. Few words about copper. I had someone in the previous panel in the morning saying that gold is not subject to supply and demand, but copper is. And the reason we are in copper is because we do expect a gap in supply and demand in coming years, driven by the fundamentals. The amount of copper to be needed in the next 20, 30 years is roughly equal to what the humanity have used since the beginning of early ages. And there is nowhere near that copper to be found. The grades are coming down. There is no new discoveries after Roberts Friedland, Utalgoy in Mongolia and Kamau Kokua in DRC. There is no big new deposits anywhere to be found. And the age of the existing mines is rapidly approaching Middle Ages, if not gray hair, with 55% of all operating mines over 30 years plus. Unlike other commodity sectors, which are dominated and effectively controlled by China, such as nickel, lithium, aluminum, or cobalt, copper is not, at least not yet, because it has a very diversified set of suppliers and a very diversified set of end users. So it's a better market to be in than the above-mentioned commodities. And it also has some new sectors which also demand in copper, such as artificial intelligence, data centers, but also the old ones. Weapons production require lots of copper. So we do expect a significant increase in demand. Market understands that, with the pure play copper companies are trading at significant premiums to the diversified miners. And that's a space where we are planning to be. We've been busy over the last 6 months, having acquired a producing mine in Turkey, raised $200 million to finance its expansion in copper production, and now moving into public markets effectively. ACG Metals have been the public company for the 6 months only, in the way it is. We started our life as a SPAC, but acquired the first asset in Turkey in September last year, and now with effectively full funding, the team in place, and construction ongoing, we do expect a very significant upside in the current market cap, 4 to 5 times in the next 12 to 18 months, by simply re-rating and increasing liquidity in shares, and hence I'm here. This is somewhat a homecoming for me personally, since I listed a large aluminum company in Hong Kong 14 years ago. So this is a pleasure to be here as the first investor conference for ACG Metals since our creation, essentially. Today, we have plenty of cash on hand. We just raised the bonds. Net debt is just around $30 million. Last year, EBITDA 75 million. This year, we expect to produce about 33,000 ounces, sell about 40,000 ounces because we have some stuff in the heap leach that will generate about $60 million in EBITDA. And this is from the sales of gold and silver doré bars. Next year, with the completion of sulfide project, we're moving into the production of copper concentrate and zinc concentrate, which will generate about $100 million EBITDA on a base case consensus pricing. At spot, probably will be 120, and if you add to that continuous production of gold and silver, will certainly be more than that. We are a public company listed on the London Stock Exchange, with the key shareholders spread between Turkey. Lydia is a company from whom we acquired the asset. New York, Argentum Creek, as well as Glencore and Traxys are shareholders and off-takers for our material. A few interesting faces on this page, including some of the well-respected advisors present here. The recent joiner is Mike Pompeo, former head of State Department, and they say there is no such thing as a former spy, so a former head of the CIA. And that is our connection to Washington, D.C., as well as a good link to the governments of the countries where we intend to acquire more assets. The first asset we bought is on the eastern side of Turkey, 3 hours drive from Izmir on the Mediterranean coast, well positioned to supply smelters in Europe with a copper concentrate and zinc concentrate. The most important thing about any mining assets is the ability to generate cash. Looking at this picture, you'll see that our operating margins are 73–75%, means we are generating a lot of cash, and probably today are trading at about 2 times cash flow. We are building the project, which is a sulfide expansion. We're going from production of gold and silver into production of copper concentrate and zinc concentrate. We're building that project at $7,000 per ton of production capacity. If you go anywhere in the world, that capital intensity would be probably anywhere between 15, 20, even higher. $1,000 per ton of capacity. It's a brownfield project, very simple. That's a reason for the small numbers. We are planning to start commissioning in the first quarter of the next year. As you can see, some pictures, very well advanced on construction, raised the money in the beginning of the year, been building for 2 months on budget and on time. We have plenty of upside on the both oxide and sulfide parts of the deposit, meaning that we will continue to produce gold and silver doré in parallel to production of copper concentrate and zinc concentrate. And finally, I have started ACG in order not to buy one asset, but in order to buy a number of assets across the globe with a view of building a very large pure play copper company. That's something I've done before, something meaning consolidation of the sector through a series of roll-up acquisitions. I did it in aluminium, which resulted in us listing Rusal here in Hong Kong in 2010, raising over $2 billion in IPO. We intend to do similar things in copper with targets spread from Turkey, Eastern Europe, Africa, South America, and North America, aiming to become a relatively large company in a short period of time, inshallah, as they say in Turkey, and there is plenty of space to create value for people who would decide to join us on this small journey. Thank you very much.